On Ticker, this is Import Export with Lawrence Christofels.
So, Kevin, mate, thanks for joining me again.
Thanks for the invite again, Lawrence. Yeah.
Great. What do you see are the financial impacts of the coronavirus for importers?
Yeah, so I reckon there's a few things which I feel is important at the moment. Well, what's going to happen is the inability for, I guess, current importers to perhaps secure stock is what they used to be able to from their current suppliers. Secondly would be maybe shipment delays as well due to this. I mean, ports in China as well, some of them have been partially shut. So there's a bit of a traction in terms of how long it's taking to come through. And thirdly as well is margin compression as well as to be on why the cost due to the shortages. So everyone's just marking up the prices. And I think what doesn't help as well is the current Australian dollar.
The dollar, it's really dropping.
So that's been pressurized as well, which is going to affect the margins of our clients.
Well, that's the thing. I mean, when typically we work with importers and say, okay, well, what's your landed cost and your cost to serve? You know, you've got your product cost, you've got your freight cost, you've got your duties, your tax, warehouse and distribution. All of those things are important. But then when you overlay your cash cost, your cost of cash, you know, you've got, if you're running on overdrafts or you're running on different facilities, all of those come with a cost as well. But you've also got limits. So if I've got suppliers on payment terms, I've got customers on payment terms, and that gap's getting wider and wider, and I've got no stock to sell, you know, it's a recipe for disaster, isn't it?
And I think nowadays as well, I think they might have to utilize new suppliers just to be able to meet the orders. Whereby in the scheme of things, they might not provide you with as favorable terms as what your existing suppliers do. That's going to put a bit of a hemorrhage on your cash flow position.
Absolutely.
And that's where, you know, I guess I advise my clients as well. What we do is we do a 12-month cash flow forecast, especially for scenarios like this, just to understand where you're going to be short at, and then work out a solution based off that.
Well, that's where, I mean, you're 100% right. Again, you know, we talk to companies who are thinking already now, they're looking at local, different suppliers. Some of them are having to restart domestic manufacturing just to serve their customers. You know, there's companies out there in Australia who are really doing it tough, and they have to look at all their suppliers. But if they're used to 60, 90-day terms or even open terms, if I don't know you as a new supplier or a new customer, I can't do that. I'll want either prepayment or terms.
Exactly.
And you need to be able to have the cash to do that.
And I guess that's where we come in and help out with clients, you know, options of like trade finance options there, where we understand what the supply is required, what's the trade cycle like for the client, and perhaps propose to them we get finance for the period which they need in order the stock to arrive the country. They might be able to get more discounts as well, because in terms of like with the existing suppliers, they might have issues in China as well as, I mean, like cash flow issues, and why not we pay you upfront now, but you give us a 2-3% discount on the goods.
That's the other really important part you mentioned, Kevin. If you've got the right backing behind you, let's say you've created facilities where you can incentivize a supplier. So look, I can prepay this stuff, therefore I need a better deal. That gives you a couple of points back on your margin erosion.
Correct. And I think you know, it's always we're looking at a negative part in this whole coronavirus scenario here, but there are businesses which are striving, unfortunately, from this event. Take for existence the current tissue paper issue, whereby, you know, there must be a significant marginal increase in demand for it. And you might not have cash flow to back it up.
That's right.
So that's again when we can look at options like factoring in order to be able for you to I guess leverage and
take advantage of the opportunity.
Yes, that's right.
Yeah, you're right. I think as much as the doom and gloom is there and it's real, but that in every scenario like that, historically and currently, there is always an equal opportunity to take advantage of in that situation.
And I guess the next position I would think is important for importers is the FX position. Don't discount that. I mean, it's hard to say at the moment with the US as well cutting rates. So we've just cut rates. We're not too sure where that's going to go. That's where you need a proper FX provider as well to give you the advice and for you to secure your margins in the long run. So that's a different area which I think you need to focus on if you're an importer at this point of time.
I think the other thing that still surprises me, Kevin, is that Australian companies are really unaware of all these different new finance products. So typically, most are used to the bricks and mortar security finance, which the big four do pretty well, and they are suited to a lot of bigger businesses.
Correct.
But in times like these, if your bricks and mortar is already locked up and you've already done your mortgages and you've already done all that sort of stuff, well, then what? So you need to have creative finance, you need to have more flexible finance options, and you need to have products that might be invoice discounting or different type of things. That what's your sort of advice on those things?
I think everyone's scenario is different. Each business scenario is different. It's more of understanding what's your business like, where you're at in the position, whether you're a top tier firm, great profits for the year. You might be more of a major bank clientele, it has been a tough year for yourself. You might not be up there yet, but there are still other providers out there which can assist you during your tenure. So that's where we come in. That's where Lendcap comes in. So we basically go out, understand your business, understand your 12 months cash flow requirements, peaks, troughs, understand your financials as well, debtors, creditors, the whole shebang. And then we then come up with a proposal for you, which we go to a few lenders, see what's the best option for you, best rates, best terms, based on your scenario, and propose that to yourself. And in the long term, we will be there for you as well. So that's the whole proposition which we're at. It's
funny, you just. I had one of our clients call me yesterday. We were talking about cash flow, and he said, I saw Lendcap, and I heard about Lendcap coming on with ATLC, and he said, what's Lendcap about? The way I described it, and you can correct me if I'm wrong, is basically like a smorgasbord. Essentially, you've got all the stuff in front of you. You need to know what you need to pick and choose to actually create the best fit for their finances.
So I mean, you focus on your business, and we will focus on the finance part for you, so that we'll free up your time, and that's what we do. We're advisory sort of.
And that's right. So you can look at maybe the big banks have got some good products, and you've got some other products with other what are they called? Share of wallet. So
correct.
You don't have to have. In the old school days, you're with one bank and one bank
exactly.
only. These days now, you can have your credit cards with one bank, your mortgage with another bank, your trade finance with another thing, your forex with another company as well.
Or you can keep your stuff with the bank which you really like. But we can leverage on top of that somewhere else just for the short term. So that there are different strategies of implementing at this point of time.
So strategies. This is where a lot of companies are feeling the pain, especially importers and exporters for that matter, and even the supply chain partners. If you're a freight forwarder, you haven't been able to move stock. You've still got to pay wages. You've still got to pay rent. You've got to pay all those sort of things that you need to do. So even as service providers during the coronavirus, people are always thinking about importers and exporters. But the people who actually move the cargo around, whether it's trucking companies, forwarders, brokers, they're all impacted equally as well.
Correct.
So the whole industry is feeling the pain. What I think is, as you said before, it's a really great reminder and timely opportunity for them to revisit their whole cash flow requirements.
Yes, definitely.
And you've got to put in some of these buffers like what we're facing now. Hopefully things are going to turn around quickly. But what we should be all learning from this situation is that you can't be running on this thing, oily rag much more. From
can't be crossing your fingers and hoping for the best. And it's just good to be on the front foot as well. That shows the position for your current banks and for the options we come up with. You have a strategy in place.
Thanks so much, Kevin. It's a really important part of cash flow is king in every business, but international business it's your lifeblood of business. So thanks for joining me again today. Thanks for being part of the HLC community.